Okay, hello guys, and glad to have you on board again. Today we need to talk about this stock market, and of course we'll deal with crypto update later on, but I have some concerns about the stability perspective for the stock market. Not necessarily a red flag, meaning that we have to anticipate bearish scenarios and so on, but there are definitely some flashing lights in here, and we need to pay attention to these. So I know all the attention has been driven toward cryptocurrency markets, which are now maybe building a market bottom. So everyone start to think that as they might be building bottoms, then how can Wall Street be bearish? Because if Wall Street goes bearish, then cryptos will bloodbath and so on. Well, all of these correlation so-called studies definitely doesn't make any sense. As we can see, the correlation have been totally fucked up into in between the stock market and cryptos. I think it's a temporary situation, but still it is absolutely voided for a limited time, and until then we're gonna have to assess that there is no correlated perspective between the two. Anyhow and anyway, we do have a bearish context detected in here, bearish ranging context. So you know the drill. Okay, we study the previous stuff, we assess if this is truly a third range boundary. In our current case, it definitely is one. We have been reversing on the lower time frame with a limited time offer third range boundary in here, validated, pushed toward the higher context now. So we do have two third range boundaries aligned in here. That means if they were horizontally aligned, I would be far more bearish. The fact that they are still vertically aligned leads me to believe that there is no emergency situation, but I don't like the VIX current situation. Okay, so that's what we're going to be talking about now. We have probabilities to reverse this market, and if we do, what we need to understand is that there will very likely be no support into this trend channel. The context will not support anyway at all, and the moving average likely not as well, which means if we go down, volatility is to be expected because we seriously lack of supports. What that means is that the next available support would be daily charts context, which is damn fucking far from here. Okay? Though of course this guy is going to shift up by next month, so I suspect that for some reason 3500 would be an approximately interesting area right by next month. Okay, though we need to see this. That also means that this is where we've got the 23% Fibonacci cluster. We would also dive below the 50% context. So of course, this is where I think we're going. The question is, are we going to inch one way higher before doing such a thing? This is where I think we need to limit that risk. And that's the reason why I'm not raging for bearishness now, because there are still several probabilities for us to try going higher. Aligning third range boundaries to the upside is one of those early signals of risk limitation for experts, for expert traders. So you don't know anything about that. I haven't even made the podcast on the YouTube about these advanced patterns. So just take it as it is, okay? Horizontally aligned third range boundary would have been hell of a concern. The fact that they are not and slightly vertically orientated leads me to believe that we could align another third range boundary higher later. Okay, so still that doesn't mean we go bullish. That means we're probably going to go sideways, trying to go down and then push, and finally later on I think we're going to have all the necessary momentum. That also means betting to the upside is fairly dangerous now. And we need to be cautious. The reason why I'm talking about VIX, because VIX is definitely in a pattern that we've accessed, that we were definitely expecting. I've told you about that, and this is exactly what's happening now. We've retraced down to this moving average, we're setting prices below, and we are retracing into the previous buying support, in which we might be settled for a few days. Okay, we might stay there for a little while. That would be the most bullish outcome, in which we wait for June so that we can try going higher, but we anyway probably going to fail. I doubt the VIX can actually break below 15, which means, well, we can try diving below 17, stay there for a few days or few candles with 4-hour candles in here, but I doubt we can sustain prices much longer out there. You know that the VIX can take quite a long time in these overextended patterns, but I doubt anyway VIX will manage to sustain much longer, which means we'll finally get to build higher low points over weekly major bottoms. The structure is bullish in here as well, with 3 sets of waves to the upside and 2 sets of waves currently to the downside, leading me to believe that the next upside wave on volatility will definitely fuck up the latest resistance that was 28. 28 is a significant level of volatility. It's not crazy stuff, but that means next time we'll do better. And like we stated, the next resistance stands over 45 of, or let's call it 40 to 50-ish area. And that's definitely something that we need to pay attention to. These levels of volatility can create quite volatile market reactions. So that's the reason why partially hedged portfolios, if you have risky assets, is what I think a rational thing you should do, okay? So don't be over bearish either. It's way too early to consider going in, but let you understand that the VIX pattern we have in here can either rapidly take us in a wrong footing reverse pattern or take a little while, work our impatience biases, let the noobs go in and out, and then afterwards we go in. Regarding sentiment, you also need to understand that the smart money is still bearishly oriented to the market. It's just the dumb money doesn't yet buy at full. So if prices go below and start breaking some supports, you can be damn sure they're gonna turn net bullish, and they're gonna buy a market that falls off the cliff. So I have exactly what I wanted this week to go bearish. We're kind of a sell in May pattern, just a bit of a delay. We're playing and gambling on volatility. So smart money managers and market makers are actually trying to bet day after day that will just be fine by the next day, until we fuck it all up and we start going down, and the retail traders will obviously try to buy the dip, which will force prices even more to the downside. We've also, and I've shared this into Twitter, kind of a bit of a concern regarding the repo overnight operations. Not the end of the world now, seems to have been just a one-time event, but this is something we just need to bear in mind. That means financial situation in the background is not that clear, otherwise we wouldn't have such a spike. If it is a one-time event, then of course it's no big deal. Then regarding other market catalysts, of course we're going to get market GDP today, so that can change things, but I don't expect a big change over the numbers. That's pretty much all about it. Let's go to crypto market now. So if we look at the crypto total, we would say that we are finally reaching out first validation levels, meaning that we've retraced to the trend channel in here. So we're testing the first bearish resistances. As we can see, these are a candlestick price pattern reverses, resistance pattern areas, but that doesn't mean we're going to go bearish. I see absolutely no signals out there, no signs of slowing down, and well, it's leading me to believe that we can range in here for a little while, but there are very likely probabilities that we're going to push higher. Where do we go next is still a big question mark. I wouldn't call for profit takings in here. So I personally was questioning whether I would do this yesterday or not. I just had no clues and no signals suggesting that risk was really there. Of course, if you've bought the lows speculatively buying on the 4-hour chart like the 4th range boundary, well, sure shit, you really need to do it. Otherwise, if you've bought mid-term to long-term, like if you try to get into the daily pullback or the weekly trend follow opportunity, then you're definitely far from being validated, because validation in here would be retracing to the resistant trend channel, which is pretty far away from now, and it's still rising actually. So that's the reason why I think, depending on what you've done, if you've gone short-term speculative entries, you definitely should have secured the gains yesterday, partial profit taking, putting some stop losses, and waiting to see what's next. Option number 2 is much longer time frame perspective, trying to buy the pullback with a larger stop loss. If you bought the pullback, man, that means you should have bought with this, that means your stop loss is the daily trend channel size. So if you bought the pullback, this is your stop loss sizing, which means basically, if we take crypto total as a reference, means you're basically financing yourself for a $500 billion market cap on cryptocurrencies, which means basically you can't use leverage into such a thing. So that leads me to believe that the daily and weekly scenario are linked all together. It means that both of them cannot be used with leverage, so you need to buy spot market, and that's pretty much that pretty much means if you're going spot, then you rather like to take the biggest potential reward. Looking at the daily, but forecasting probabilities of the weekly trend to reactivate. Takes, of course, a longer perspective, but I think that's the most interesting thing to do. So do we need to worry? I doubt we can. Bitcoin as well has been retracing right up to its trend channel area. So kind of a global sentiment in which the bearish movement is now neutralizing itself. That doesn't mean it's ended, and we can sure shit have some bearish acceleration a little once in a while. I still doubt they're very likely going to show up because there is just so much demand. I've called most of my friends, those who called me in here as well. They all buying, and they buying rationally, not the same old 2018 shit in which they were calling me to tell me how much money they could make and how I should do it as well. Now they're calling me to ask me how to do it properly, and they definitely buy with cash. They don't buy with leverage, they buy good projects, they stop buying the whole bullshit. It's really way more mature investments perspective. So I kind of like that. That all means that we might have gone over bearish, but most importantly, even though we've gone bearish, most people still keep it as an opportunity potential. That's what I think is the definition of a trend. We've got a higher demand and a limited supply, and that can hardly push prices to the downside. Of course, distribution patterns and so on can alter pricing and just fuck up sentiment, but they can hardly shift the demand. As we can see, they tried hard to turn this market bearish, but people still think it's an opportunity. So even if they manage to push prices down, everyone's buying with cash, so no one's going to be forced to sell. All of the leverage traders have been flushed. They sure still probably are some, but that doesn't mean we have to margin call them. All you need to understand is that leverage traders have to pay for high interest rates. So by just standing still in a big long fucking range is also something you're going to suffer from. They're going to have to pay interest rates without having gains to make because of a low volatility. So think about it that way. Ranging inside a down zone with limited volatility is also one of the best possible ways to flush out speculative short-term traders. You just don't let them enough volatility to trade, and you just get them bored, so they have to get out. That's really that simple. Okay? So multiple ways to flush out the speculative money, and most importantly, you have to understand that in each and every revolutionary pattern, they are speculators. So flushing out the speculators to just get investors isn't part of the global picture. I expect lots of speculators to be on board, and I don't intend to see them dying. Of course, some did die last week because they were just doing shitty risk limitations. Okay? That being said, here it is. So validating, I see absolutely no reasons to go bearish, but of course we don't buy resistances. So I expect the market to go flat or retrace a bit, eventually going down to this price, which is this week's open, though we can eventually try to retest these levels, but I doubt that we're going to reverse out there. So I still think we're going to inch higher later on. Next target will be retracing to the moving average area where we've got our resistant context. So definitely lots of technicals pointing to the 40K-ish area. But we first of all have to regain the previous 41K support, which is a huge and dense technical cluster. So lots of things happening out there. And as we can see, if we ever take over the 42K area, we're going to have a shitload of resistance over our heads still. So don't try to go bullish now, but understand that the bearish move has gone really far from average prices, and therefore retracing right up there seems like the most rational thing to do. Of course, the next target would be retracing right up to the third range boundary, because remember that weekly updates perspective, what we can do is that we can, it's still very rare of a pattern, but we could have extended our daily pullback to the weekly chart reference because we closed below the 50% context. I still believe it's very less likely the case. I think we just suffered an external volatility pattern due to distribution stuff, but still, that's something we need to account into our risk management. So if that's the case, if we extend the daily range to a weekly range, means we have to reject the third range boundary. So we need to eventually retest these clusters over 52, 54K area, and we're very likely going to have to reject it right back to support. So triangle structures feels like the most probable things, okay? But normally, if we want to extend to a weekly range, we have to retest and reject the third range boundary area. All right? So pay attention to this. That's the area in which I will pay close attention to market prices, this moving average and first resistance cluster over the 50-52K area, and eventually, if we were really going positive, then retracing right up to the third range boundary. So that gives me basically a huge and dense technical cluster to pay attention to, starting at 40K-ish, right up to 60K. That's a big motherfucking cluster in which lots of things could occur. I don't think we have any strength to go higher than that. But that doesn't mean we can't get there. We can test these areas. All right? So that's pretty much all about it for today. If you're questioning your strategies on altcoins, then you have to look at Bitcoin dominance, which has retraced significantly to the downside and quite of in a straight line. So I expect in here that we could find some rebounds and probably another set of waves to the downside. So pay attention to today's and next day's session. I think that Bitcoin might be the leader out there, and that's exactly what we see today. Altcoins are consolidating, waiting for Bitcoin to give a bit of a strength signal. Eventually, Bitcoin could start trying to reach out 41K. I don't know if it's going to succeed passing over it or just fail and consolidate below. But I think 40K area, 41K area is the way to go for Bitcoin and to test how prices will react out there. So that could cause dominance to slightly rebound because Bitcoin might be doing it on a solo move. I doubt the altcoins will follow it in a first stage. I think if Bitcoin succeeds, altcoins will very likely follow through, which means that could be the driver for a second set of wave to the downside on dominance. Despite that, it's so uncertain because we're very likely building two sets of waves to the upside, followed by two sets of waves to the downside. Really looks like we're going to build a triangle. We've retraced 23% and so on. That all tells me that we're not going to be able to exploit arbitrages into this ranging section. I think that it's more like we need to use portfolio balancing more than arbitraging altcoins one versus another. So playing altcoin strength in here doesn't necessarily feel like a rewarding pattern. So it's more like spread out the capital between Bitcoin and altcoin, be patient. If you want to short-term speculate, then of course try to use your goddamn patterns. Go short-term because now everything is locked. 4 hour is going for range, which means H1 time frame reference isn't tradable. But like for example, 15 3-minute patterns could eventually be dealt with on intraday perspectives for those who really want to go short-term trading and speculative patterns. Otherwise, everything above it is locked with long-term traders. So don't try to gamble when levels of big guys are traded. This is where you can be surprised by external volatility factors. Okay, so that being said, don't pay attention to the news flow. That's what we need to do in a range. Don't listen to the crashing guys. Don't listen to the moon guys. Just be rational enough to understand that we're very likely going to settle for an in-between scenario. Boring weekly range seems like by far the likeliest outcome. And we're going to argue about it in the next weekend update. Bye, guys.